Most people think they're in the game because they bought Bitcoin. But buying an asset doesn't mean you understand it. It doesn't mean you're on the right side of the trade. It just means you've entered the arena. But ask yourself, who's on the other side of your bet? Who benefits when you sell too soon? When you panic during sideways price action, and when you take profits while they're still playing for global dominance. See, we live in a world where owning Bitcoin is no longer about speculation. It's about conviction. And what you believe about what's happening right now will determine whether you walk away with a few $1,000s or generational leverage that can never be undone. Because here's the truth, BlackRock doesn't need Bitcoin to go up right now. They need you to sell it. So let's go ahead and zoom out. The biggest myth in the market is that institutions are coming, like we're still early, like they're still watching from the sidelines. It makes us feel safe, optimistic, and patient. But that myth was designed to keep you comfortable, and while they accumulate in silence. See, BlackRock, Fidelity, JP Morgan, they're not retail investors. They don't buy on impulse. They buy through mechanisms that don't show up on your chart. And they use structured products like OTC desks, debt issuance, bond leverage, and ETFs to quietly build positions without spooking the market. So when prices go sideways for months after ETF inflows hit record highs, you should be asking why. Because here's the truth, price stagnation isn't weakness, it's strategy. Now BlackRock doesn't want Bitcoin at $500,000 right now. They want saturation, they want distribution, and they want cheap supply before the real game begins. And the only way to get it, well, is to make you think there's nothing happening. So let me ask you something. Why does price flatline after 80,000 Bitcoin gets bought in a weekend? Why don't we see massive green candles like we used to? And why is the most scarce asset on Earth feeling heavy? Well, it's because it's being managed. Now, not by one entity, but by a collective pressure, a quiet understanding between institutions, which is, let's not run the price until we've drained the weak hands. See, think of the market like a poker game. Everyone's holding their cards, but the amateurs go all in with emotion. The professionals wait until you fold. Now, BlackRock and other institutional giants aren't waiting to see if Bitcoin will work. They already know it's the future, but they're just not going to pay full price for it. Now, that's what this whole ETF era is about. Not making it easy for retail to invest, but making it easier for institutions to buy what you already own. Now, the ETFs created a vacuum. They created passive inflows, and now they've created the illusion that anyone can buy Bitcoin and easily. But here's the catch. Every time you sell, even through your brokerage or retirement account, that Bitcoin goes to someone who doesn't flinch during volatility. It goes to someone who never plans to sell. And that's what makes this cycle different. Now, we're not waiting for another wave of adoption. We're living through a silent transfer of Bitcoin from emotional holders to institutional fortresses. Now, the game is no longer about hype. It's about exit velocity and how much Bitcoin they can acquire before price starts running away from them. And how much of it are you willing to give up before you realize what's happening? That's why the price isn't pumping. That's why sentiment feels stuck. Because the longer it stays boring, the more people give up, and the more coins become unrecoverable to the average investor and forever. forever. So let's get specific. BlackRock doesn't need 1000x gains. They just need predictable, defensible, and long-term upside. They need a store of value that's outside the US dollar but still priced in it. They need an asset that can be held, borrowed against, and collateralized, and packaged into wealth preservation vehicles for their clients. So what do? Well, they launch ETFs. They enable in-kind redemptions. They open up structured bond markets that allow you to issue debt, collateralize it with Bitcoin, and then turn it into a yield engine. Now, they don't care if Bitcoin is at $60,000 or $100,000. They care if you're still selling, because as long as retail sells, supply exists. And once that supply is gone, the next bid might be from a central bank. See, Bitcoin was never meant to be a quick trade. It's a belief system with monetary properties, and belief doesn't live on trading view. See, the real wealth in this cycle won't come from buying low and selling high, it will come from holding when it makes no sense, from resisting the illusion of taking profits in fiat and realizing you already own the most pristine collateral on earth. Now, at a certain point, it won't matter what the price is, because price is a function of access, and access is being removed, slowly, permanently, and while the rest of the world waits for a green candle. See, most people don't realise they're being outplayed. They open their app, they see Bitcoin flat for 90 days, and they think, maybe I'll sell a little, maybe I'll rotate into something else. But meanwhile, across the globe, a pension fund just executed a $200 million Bitcoin bond. A sovereign fund just increased its exposure, and a tech firm just moved treasury into cold storage. But none of that hits your feed, because they don't want you to know. They need you distracted. They need you uncertain, because the worst thing for BlackRock is a public that refuses to sell. So if you're wondering why the market feels stuck, it's not because Bitcoin is overvalued. It's because we're nearing saturation. We're nearing the moment when buyers outnumber sellers, and forever. And once that happens, well, price won't move like it did in 2021. It will jump, gap up, omega, candle. Because in a digitally scarce system, the biggest risk isn't missing the dip, it's being priced out forever. Now, you're not early anymore, but you're not late, unless you stop believing. So ask yourself, why would the most powerful asset managers in the world build an ETF empire unless they were certain about where this is headed? Now, they don't want to beat retail, they want to buy from retail. So don't give them what they came for. Now, if you want to go deeper down the Bitcoin rabbit hole, then check out my ebook down below, because it's the wake-up call that they never wanted you to read. Now, I do also have to chuck this disclaimer in here as well, and I highly suggest just pausing the video and having a little read. Now, if you've made it this far, and if you're looking for something else to watch, then click right here and have a watch of this.